Hello, it's Tuesday, September the 6th. I'm Hwang Jie, and this is Business Daily Live from Seoul. Coming right up, troubled Hanjin and the Korean government moved to resolve a crisis in global cargo shipping with around $200 million or more worth of funds. The latest consumption trend signals more single-person households are digging deep into their pockets to spend compared to couples and larger families. Over half of Hanjin Shipping's fleet has been ground to a halt as the company slid into court-led restructuring last week. In the latest efforts to smooth over the crisis, the shipper's parent company, Hanjin Group, as well as the government have vowed to provide financial support. Kim Min-ji reports.
Hanjin Group says it plans to extend roughly $90 million to its ailing shipping arm, currently under court receivership, to defuse a widening logistics crisis. The group says the decision was made to minimize the fallout for exporting and importing firms, and that 40% of the support funds will come from the chairman's private assets. Hanjin says it has formed an emergency team to handle the loading and unloading of ocean freight and is seeking measures such as deploying substitute flights for urgent cargo. Earlier in the day, the government and the ruling party agreed to extend low-rate loans to Hanjin worth over $90 million if the group agrees to put up collateral. It also agreed to help the shipping firm secure entry rights at ports and obtain stay orders in over 40 countries to keep creditors from seizing its vessels. More than 60 Hanjin ships have been stuck in irregular operating conditions since the company filed for court receivership. A majority have been stranded, while a dozen have been banned from loading and unloading at ports in fear the company won't be able to pay related fees. Facing this logistics crisis, the government says Hyundai Merchant Marine, the country's number 2 shipper, has agreed to deploy 13 ships on Hanjin-operated routes to make up for the shortage in shippers. 4 Hyundai vessels will run on American routes, while the remainder will support shipments to Europe. Kim Min-ji, Business Daily.
And for more on the latest on Hanjin Shipping and how it's going to affect the overall Korean economy, we are joined by Professor Yang Jun-seok from the Catholic University of Korea. Thanks for joining us, Professor.
Happy to be here.
So let's start off with what specifically triggered this turmoil for Hanjin. The global shipping industry has taken a hit due to faltering global trade. But what do you think it's about Hanjin that pushed it over the edge?
Okay, well, the problem with Hanjin always has been that it had a very large amount of debt. And this was true even before the 1997 Asian financial crisis. Now, if you go back to the history of the firm, then it was part of the Hanjin Group. The Hanjin Shipping was actually founded by the Hanjin Group founder. And then when the founder died, he gave it to one of his sons. And from all indications, the son actually did a fairly good job, even with the high debt ratio of running the company. But then he died in 2007, and it was taken over by his wife. Problem is, the wife didn't have that much of a technical know-how on running a shipping company. Now, that doesn't necessarily mean that the chairman of the board always has to have all the technical knowledge, but under cases like that, you usually have a lot of capable technical advisors around you, but from all indications, she did not. And coupled with the global slowdown since the global financial crisis, that made the debt crisis a lot worse for the Hanjin company.
And in fact, you just mentioned the 2008 global financial crisis, but the slumbering shipping industry has been an issue since then, the crisis. And critics say the Korean government was rather too late in introducing measures to tackle this issue. What's your take on this?
Okay, well, the problem, as I mentioned, this is a long-term chronic problem. And there has been various measures throughout 1990s, 2000s, and even 2010s. Now, a lot of people argue that compared to, say, China, which spent about 41 trillion won to prop up its Costco shipping, and Germany, which had a 22 trillion won equivalent for a marine fund, Korean government has done too little. Now, the problem, though, is that, even if they set up these type of measures, would that have helped the shipping industry and Hanjin in particular get over this problem. Since about 2008, I think the greater problem has been management. Now, if there were good management in place and they gave these kind of active policies, then they might have gotten the problem under control. But if you still have bad management and if you put in a lot of money, then it's just throwing more good money after the bad.
The downfall of this Hanjin, one of the world's largest shipping company, will definitely have consequences for retailers worldwide and other related industries, of course. What broader implications do you see this having for the economy at home and abroad?
Okay, well, the shipping industry and the trade association, their back of the envelope calculation is that eventually, overall, altogether, this Hanjin incident will cost Korea about 17 trillion won. It'll cost about 2,000 jobs directly because Hanjin is going out of business or vastly reducing its business. And then coupled with the impact in the Busan area, it might cost up to 20,000 jobs.
Right.
Now, there's been a lot of argument on whether these are correct figures, whether they have been estimated correctly. The trade association has been receiving information on what's actual losses going on right now. And their figure right now is running about $12 million. And figuring that the Korean exports in August was about $40 billion, so far there hasn't been a lot of impact. Partially it's because a lot of large companies have expected something like this to take place, so they have sought alternate means of shipping.
Shifting gears a little bit, Hanjin's financial failure is also set to highlight problems within Korea's unique chaebol structure and the corporate governance structure. How so?
Okay, well, as I mentioned before, this shipping company was originally founded by the founder of the Hanjin Group, and there's a question on whether this type of family-oriented management always lead to good managers. And if they have bad managers on top, how do you get rid of them before the problem blows up like this? If this were, say, a company in, say, the US or in one of the more advanced European countries, then when they had bad profits, when they had these abnormally high debt ratios, then you would have the chairman, the board of directors or the stockholders try to get a new manager. But here, because you have the idea that it's the chaebol family's firm, even though their stocks are publicly traded, you really cannot kick the managers out.
And what's your take on the multi-billion-dollar worth of lawsuits from ship owners and other related parties that Hanjin will have to face from now on?
Okay, this is a serious problem, but in countries where you have good bankruptcy proceedings, this is normal. The U.S. subsidiary of Hanjin went into Chapter 15, I understand. And that means a lot of their operations are protected, a lot of their assets are protected. But worries are some of the less advanced countries where they don't have good bankruptcy proceedings, where you can confiscate assets, and then you have to negotiate to try to release those assets, and that might take quite a long time. And Korea also doesn't really have a very good bankruptcy proceeding.
Last but not least, when it comes to the overall shipping industry, some say the trouble from Hanjin could actually create opportunities within that sector. If you could tell us more about that.
Okay, well, there has been a lot of analysis on the shipping industry, and the problem is because you had very large trade volumes during the 2000s, and then that was suddenly cut short by the global financial crisis in 2008. You have a lot of overcapacity in the shipping industry, and there has been a lot of competition which drove prices below costs. Now, because Hanjin has been taken out of the picture, some of that oversupply will be reduced. Right. So firms which are left will probably be able to raise their prices by some amount.
And that is already happening, in fact, right?
Well, the prices have risen, right. But you also have to remember part of that is because of the reduced demand, but part of that is apparently seasonal because we're coming close to U.S. Thanksgiving and Christmas season. Part of that also is increase in prices is because a lot of the especially small and medium-sized enterprises in Korea expected Hanjin to carry their freight, and now they have to find alternate shippers very quickly. And it's like airplane reservations. If you have to find a seat very quickly, you're going to have to pay through the nose for it.
All right. Thank you so much for your time today, Professor.
Thank you.
The Korean government has confirmed the price caps on gifts and meals that will be imposed when the nation's new anti-graft law takes effect in less than 3 weeks from now. Under these standards confirmed at a cabinet meeting on Tuesday, civil servants, journalists, teachers, and other public sector employees will not be allowed to accept meals exceeding 30,000 won, or some $27. The limit for gifts has been set at $45, and for cash gifts at occasions like weddings and funerals, the maximum will be $90. The anti-corruption law will affect almost 41,000 institutions, over 95% of which are schools and media organizations. The law, first proposed 4 years ago, has now gone through all the necessary legal procedures and will take effect on the 28th. Chinese investment in Korea's real estate looks far from slowing down. Their land buying is extending from Jeju Island to right here in the capital city of Seoul. Eunice Kim has more.
The trail of Chinese money is making its way from land investments on the resort island of Jeju to the capital of Seoul. Data shows Chinese buyers accounted for more than 90% of the rise in foreign property investment in the first quarter. Kurogu, a district in southwestern Seoul, is an area particularly concentrated with Chinese-owned land. The district alone has seen the number of Chinese deals multiply in recent years. What was 21 transactions in the first quarter of 2014 nearly quadrupled to 83 new deals in the April through June period of this year, bringing the total Chinese-owned plots in Kurogu to 157 as of the second quarter. Purchases also extended to nearby Yeongdeung-pogu, the up-and-coming Yeonnam-dong in Mapogu near Hongik University, and even the high-end high-rises of the desirable Gangnam-gu district. As a result, land prices are rising. The appraised value of land held by Chinese investors saw a 19% bump up last year on year, which was double the average gain enjoyed by other foreign owners, according to data from Korea's land ministry. This as Chinese investors flush with cash buck the trend of foreigners withdrawing from Korean real estate. Korean tenants paying rent to Chinese landlords is becoming a more and more common sight. Industry experts caution it could be a matter of time before entire neighborhoods slide into the hands of the Chinese, as already seen in the U.S., Canada, and Australia. Eunice Kim, Business Daily.
Living alone can have its own merits, and in Korea, it looks like greater freedom to spend is one of them. Research shows the tendency of consumption differs greatly depending on how many members a household has. Our Lee Ju-young explains.
It's been an uphill battle for the government in getting more people to spend as penny-pinching consumers face a protracted economic downturn. But there's one particular group which has seen a continual rise in consumption. According to Statistics Korea, the average propensity to consume for single-person households has increased every quarter from last year, reaching 77.6% in the second quarter. That means an individual living alone is likely to spend about $77.6 for every $100 they have. The picture is quite different for households with 2 or more people. While one-person homes saw an increase each quarter, larger households saw their tendency to spend plunge to 70.9% in the April to June period. That's the lowest point since records have been kept in 2003. Breaking down their spending patterns, people living alone spent a lot in leisure activities, shelling out nearly 37% more than last year. Money put towards domestic services and fashion-related products also increased by double digits, in stark contrast to homes with more than one member. The Statistics Office says this is largely due to the stagnating income of Koreans, coupled with the growing number of aging couples who are more conservative in spending. Experts say the rapidly increasing number of single-person households over the years is gradually changing government policies and corporate marketing. But they add more needs to be done to catch up with the actual pace of change in order to capitalize on single-person households, which are more inclined to open their wallets. Lee Ju-young, Business Daily.
And that's it for this edition of Business Daily. Hope you've enjoyed it. I'm Hwang Jie. Do stay tuned to Arirang for business news updates and more. And goodbye for now.